This Friday, we see a good performance in the stock market, with the SPY and the QQQ rising, and we see some stocks like Nvidia, like Tesla, up about 4% right now as I record this video. But is this reaction good enough for the market to reject the top signals we saw yesterday? Will we avoid a sharper correction? Well, in this video, we will analyze our stocks, we will define the main turning points to keep an eye on next week, so stick with me because this video is gonna be interesting. Welcome to the Finance Hydra channel. My name is Nathan. If you don't know me, my name is Nathan. I'm a trader and I like to share my thoughts and ideas here on this YouTube channel. Welcome or welcome back to the Finance Hydra channel. Now, as we can see here, SPY is facing some trouble over here because it just closed this open gap over here, which is acting as a quite reliable resistance level for us. I always tell you guys here in this channel, gaps work as magnets for the price when reversals occur. Honestly, I thought we were going to face a more serious resistance level around the 565, the previous all-time high area, but okay, it is not surprising to see SPY struggling around the 562, but there is a problem over here. The problem is that yesterday we did this bearish engulfing candlestick pattern, which is statistically speaking is a quite reliable bearish reversal candlestick pattern when this pattern gets triggered. All right, so far, meaning we gotta lose yesterday's low in order to trigger this bearish engulfing candlestick pattern. So far, we didn't. So far, we are still above yesterday's low, which is around the 554, which is coincidentally is just around the previous top level over here on August 1st. Previous top level acting as a future support level, as a current support level right now. This is another classic example of the principle of polarity in technical analysis, which says that previous top levels are gonna work as future support levels and vice versa. Now, from a technical point of view, the 554 is the most important support level for SPY. Only by losing this key point, we're gonna trigger this top signal, we're gonna trigger this bearish reversal chart structure, and we're gonna make a sharper correction on SPY, possibly retesting the 21 EMA on the daily chart over here, the exponential moving average on the daily chart over here. In the worst case scenario, we could see SPY closing the 554. That would be okay. The bullish bias would still persist. This is not gonna be a bearish reversal chart structure. I always tell you guys, pullbacks are not reversals. They are two different things. Pullbacks most of the time are buying opportunities when they occur in a bull trend. Of course, reversals, no, reversals are different. So far, any pullback to one of these key support levels would be totally normal, expected, healthy, good, and another buying opportunity. On the other hand, if we see SPY breaking yesterday's high, breaking the 562 resistance level, then we're gonna reject this bearish engulfing candlestick pattern over here, making this a possible bear trap. And in this scenario, SPY could easily break the all-time high. The momentum would be very good. SPY could break the 565 and seek higher levels. Similarly, we see the QQQ also struggling around this area over here. We don't see any breakout yet. It is still above yesterday's high, but it is also below yesterday's low. I'm so sorry. I'm so sorry. It is still above yesterday's low, but it is still below yesterday's high, meaning we don't see this bearish engulfing getting triggered, but we don't see this pattern getting frustrated as well. If QQQ frustrates this pattern over here, there is another open gap over here, which again, gaps work as magnets for the price, and this is gonna be a very technical resistance level for us. But if you ask me, we could easily retest the all-time high area again, breaking the $500 because the momentum, the bullish momentum would persist. We are still bullish. We are still in bullish territory. We are still above the 21 EMA on the daily chart. We are still making bullish chart structures. Now, how this is gonna affect our stocks? Tesla is a very delicate one because we are still above yesterday's low, we are still below yesterday's high, and we have yet to reject this bearish candle, but the situation is not that good. Only by rejecting this bearish candlestick pattern over here, I see Tesla making a more reliable, a more robust bullish reaction over here, possibly breaking the next resistance level around 233 over here, which was a previous support level and also acted as a resistance level here, here, and here again. So $233 is going to be our next major resistance level. There is another open gap over here, 245. So Tesla could easily seek these resistance levels over here if we reject this bearish candlestick pattern. If we don't, we could seek our next support levels. There is the 206, which is very close to the current price right now, but in the worst case scenario, I see Tesla retesting the 182 again. I'm a little bit skeptical about any miraculous reaction, but I'm also skeptical about a crash over here. All right, I always try to be realistic, and since we are traders over here, remember, trading is reactive, it is not predictive. We don't know the future, so let's just react properly to what we see right now. And as far as I know, it all depends on the direction of the breakout of this bearish candlestick pattern over here. Similarly, we see Nvidia also struggling to break this resistance level, $130, this red line over here. And this red line is quite interesting because it is acting as a very reliable resistance level for us on the daily and on the 1 hour chart as well. Short term speaking, this looks quite important because guys, in addition to this bearish engulfing candlestick pattern seen on the daily chart, in addition to this pattern over here as well, which seems to be an exhaustion bar, a bullish candlestick pattern after the bullish bias was already materialized over here, we see a strong bullish candlestick pattern, and in sequence we see a bearish candlestick pattern losing this candle's low over here. Therefore, it looks like an exhaustion bar, and right now we see another bearish engulfing candlestick pattern. So we see a few top signals on the daily chart, but when we look at the 1 hour chart over here, we see a possible triple top chart pattern, which is another top signal. Therefore, if we lose yesterday's low, it is official, all right? We're gonna see another correction. And remember, corrections are not reversals. As far as I know, any correction to the 120, to the 21 EMA on the daily chart would be totally normal, expected, and even desirable, because it is gonna be just possibly another buying opportunity, because the risk-reward ratio will be optimized near a support level. All right, and of course, guys, if you want to learn how to trade these patterns, find out more about the statistics that define the chances of reversal, etc., and above all, how to trade these patterns for real, you can download our complete ebook on technical analysis and trading strategies for free. What's more, you can even try our service for free, in which I share our trading strategies with you, always working with the technique and strategy we teach in the ebook, always using risk management. With us, you will learn hands-on. We are not gonna just teach you and leave you, all right? No, you're gonna learn with us with real market experience. For instance, Nvidia is one of the stocks that is on my radar right now. I'm expecting to see a pullback. If we see a pullback, great, fantastic. It is gonna report earnings in 5 days. It all depends on how it is going to react next week. Let me share my personal chart with you guys over here. The 5% project bought Nvidia around this blue line over here. Stop loss, because we always use stop loss around this red line below this candle's low. Our first target was $120. It simply broke our target. Therefore, don't you agree that if we see a pullback to this area, could be just another buying opportunity. Another stock that we traded over here was Compass, above the stomach candlestick pattern, above the 21 EMA, buy above this blue line over here. Our first target was for $4.89. Today it is breaking our target. It is going up more than 10% today. Another classic entry point using technical analysis, price action, and risk management. Oracle over here, another classic buy signal because we saw an inverted head and shoulders chart pattern on the 1-hour chart, and the rejection of this bearish chart structure on the daily chart right above this gap over here, right above this gap support level, which was a previous resistance level over here. Principle of polarity, gap support, inverted head and shoulders, a very technical trade. It broke our target over here, and right now any pullback to this area could be another buying opportunity. So there are more. I have many stocks on my radar, just expecting to see another opportunity. If you want to join us, remember, join the 5% project. Link is in the video's description. All right, now as we can see here, Tesla and Nvidia are looking very good, but we have yet to reject our previous bearish chart structure. We see AMD. AMD made a very sharp bearish reaction yesterday. We are about to lose the $153 over here. We are making this, in this case over here, today's candle is very weak. Only by breaking yesterday's high, we could see AMD flying again. And in this scenario, I see AMD closing this gap over here. Again, gaps work as magnets for the price. 174.53 cents. This is gonna be our next technical resistance level, but we gotta see a meaningful bullish reaction on AMD in order to convince me that AMD is gonna make a nice bullish reversal. Palantir is another very good one that is going up sharply. This one deserves a pullback because it is very annoying. I feel very uncomfortable in buying near resistance levels. Always buy near support level, guys. And after closing this gap over here from 2021, February 2021, we see Palantir losing momentum on the daily chart, trying to make a pullback, but we gotta see a bullish reaction above the 21 EMA first, and then, only then, I will consider buying Palantir again. You guys are asking me about Broadcom, which is also trying to make a pullback. This one is closer to the 21 EMA. It is on my radar, by the way, on my personal radar. After closing this gap over here, it feels like we are just stabilizing. We are moving sideways. It is a sideways correction, which is also fine. I like to see sideways corrections because they tell us that this particular stock is not supposed to drop yet. It still has bullish momentum, but since the market looks very difficult, very complex right now, investors are quite nervous, well, then it just moves sideways because there is no bullish momentum, but there is no bearish strength over here. Therefore, sideways correction. The 21 EMA will catch up with the price. Instead of the price dropping to the 21 EMA, we're gonna see the inverse, and then only then, if we see a bullish signal, great. Broadcom is gonna be another buying opportunity. It's gonna give us another buying opportunity. This one over here is another very interesting because just like Broadcom, we see a sideways correction, all right? We see a few resistance levels over here, 636. We see the 21 EMA on the daily chart, but so far there is no meaningful bullish chart structure here yet. If we see one, great, I'm gonna be the first one to tell you guys. Therefore, consider subscribing this channel. Click the like button to support me, because if you don't, maybe you're gonna lose this channel forever. Because here on YouTube we have many content about stocks, stock market, technical analysis, etc. But here on this channel you'll find unbiased analysis, all right? Totally unbiased. We only talk about technique, strategy, facts, statistics, and then maybe this is what you need, right? Because so many people like to panic other people, all right? Or like to hype things up. Here in this channel, we don't do that. We only talk about technique, strategy, always calmly, always using the state of the art of technical analysis. Therefore, consider subscribing this channel. So in the end, In the end, it all depends on how the indices are going to behave next. If we see they frustrating their previous bearish reaction, I believe the broad market is going to make a very decent movement next, especially tech stocks, because the QQQ is quite far away from its gap, it is quite far away from the all-time high, so it has plenty of upside left. Let's see in which direction we're gonna see a breakout. Next week I'm gonna be here for you guys, so again, subscribe, click the like button. Thank you very much for your audience, stay safe, see you guys Monday.